been how have things been going so far?
I'm getting good at I stay in the charts. I look at it every day, so I'm dedicated in that part. Results are I'm getting used to being a little bit more patient, but um not thinking I'm getting the consistency that I would like as far as my return going. I know I'm not gonna be perfect every time, but most of the time when I'm getting stopped out, so it's mostly small losses, which is good. But I am seeing the money printer. I am staying mostly during the peak times, as far as like 7-Eleven, looking at those times. Um, Probably still, I've been, I can see fair value gaps pretty good, FUGs, but harder for me understanding the order blocks part, I guess, for me.
So order blocks you're having trouble with. What about um how has your setup been going so far? Your AM setup. How's that been?
How
Have
do you
you
mean by
you been
explain? How do
documenting
you
your win rate?
say again?
Have you been documenting your win rate?
I mean, I don't, the only way I document it is through what I have on TradingView, that it keeps a roll of all of my trades. I haven't journaled each and every one of them um, in that regard.
All right, let's get you both set up with a notebook and a pen and let's start journaling our trades. It does a lot for the mind, and your ego will right away tell me to fuck right off, and you're not going to journal. And I promise you, you curb that and you start journaling, you will be light years ahead of people who elect not to journal. I promise you. It not only helps you hold yourself accountable, it really helps have epiphany moments. It's journaling and writing things down is like having a discussion with your best friend. And within that discussion, you'll have these eureka moments, these enlightening thoughts. Bridges connect. All of a sudden, things make sense where they didn't make sense before. Or maybe you didn't even pay a specific thing any attention. And then all of a sudden, you're within your writing, you'll discover something. And they're very enlightening moments. So let's make sure that you guys are journaling.
Okay.
Um,
I do have one. I just haven't been consistent about it. So, um,
So there's two things to that.
yeah,
When you are losing, you're not going to journal because you're not going to want to hold yourself accountable to the failures that you are enduring. Because if you're not journaling, that means you're kamikaze trading. That means you're pressing the button, you have no idea what you're doing. You're beyond that already. Okay. So if you have a moment, say you're journaling for a few weeks, everything's good. Then you take a loss and you'll feel shame and you won't want to journal that trade. That's the one you have to journal because that's the one that's going to help hold you accountable for the next time that you're going, okay, I don't want to have this as a journal entry. When you're sitting there in front of the charts and candles are moving and your setup is already played and ran off without you, but you weren't sure if that was it. And then you'll remember back to the last time that you chased that move and it stopped you out. And then you ended up kamikaze trading because that loss just ended up defeating you because mentally expelled all your mental capital even after making thousands of dollars the last couple of few weeks, whatever it was, as this example. And then you'll take a loss and it'll just totally defeat you and you won't want to journal that. But if you had journaled it, you would go, okay, I'm not going to kamikaze trade. I'm going to sit there and wait patiently for the next setup. That way you won't want to have to put that in your journal entry. So there's multiple positive reinforcements to journaling. And I can tell who is and who isn't right off the hop. And it shows in their ability to show setups, their ability to show the executions on those setups. You'll be more picky with what you want to engage with in price, just naturally. Um, Also, you don't even understand how much money you're going to end up making. By the time I'm done with you, man, in a year from then, if you're not like on your way to becoming a millionaire, like there's like then you probably have some serious issues that you should address. But you're about to make so much freaking money, dude. It's retarded. It's absolutely retarded. So like you are now changing the family history in your entire tree. You are planting it in Martha's freaking vineyard. So, personally, I want to document this. Why my family, let's say Trump is not a good guy and things just decline worse from where we're at now, right? I ain't sweating it. I ain't worried about what gas prices is. I don't care what groceries are. I'm still eating, and it'll be like that as long as there's markets. And I mean, maybe our dollar goes to $1 trillion like all the other poor countries or something, right? But
Mhm.
as long as there's charts, we have an income. Okay. And you're only going to get that level of confidence and cozy with experience. So, like, journaling will help you get there way faster. And I know this personally because my trading career took off when I started journaling. And I did the exact same thing everybody else does. I lose a trade and then I stop journaling. Oh, and then there's the flip side of that coin. You're doing good and you stop journaling. That is the worst. Do not do that. Be
Okay.
consistent in journaling just as much as you are in your setup. So for this session, before we do that, Siggeir, you watched the video. How did you like it? I know you really liked it.
You guys hear me?
Yeah,
Okay. I but need to say first, I'm really bad at English, but I'm understanding what you say, but I'm uh, I'm not good at speaking it.
gotcha. Okay, well that's
Okay.
fine. You sound decent. It doesn't sound horrible. It's not like you're butchering it.
Ah, but the
So,
video was nice, but I need to get in some hours. I get in some hours to get it. Yeah, I don't know.
so you're doing good. So you like the video, everything
Yeah,
clear as day, I hope.
yeah,
Okay, so there's a lot of note taking in that video.
yes. I watched it 3 times.
Nice. Okay, so just keep showing up to the lives. Now that you have the lingo,
Yeah,
okay, don't stop there because there's a lot to learn. Okay, there's a lot to unpack here, and I don't want to overwhelm you with stuff. Okay, just as it stands, I'm giving you the freaking holy grail to setups. And it's something for you to hunt that's within the smart money concepts. Okay, I'm not here to teach you everything smart money concepts. Everybody has the same free resources that I had. And because price repeats and it's fractal, you can go back to his teachings from 2010 and see the same stuff in your charts then that you're seeing right in front of your face. So there's a lot there's a lot of moving parts with smart money concepts. There's a lot of different models and you only need one. So within the one price action profile, I am revealing how to apply the concepts. So I would encourage you to go to Michael's channel, he's ICT on YouTube, and start with the primer course, the um the primer, the market maker What is it? The primer and oh, the core content and the Scout Sniper series. Okay, do the core content last. So do the primer and the Scout Sniper series first. After those two, then move to the core content. Now, when you get up to like months 10 and 11, those ones are a little bit out there. They don't really apply to what we're doing. They're for commodity markets and stuff like that. So don't really worry about the last 2 months. Just the first 8 months. Basically the first 10 months is what you want to be studying. The videos aren't too long. Some of them are, but it's study work. It's literally you are in now a PhD freaking chart class. So, you know, I want to see you make it, and there's a lot of hard work to do. But as for now, that video I sent you, that is the bare bones, easiest bread and butter setup to hunt. And within that price action profile, like for example, this here, well, let's look at one that actually moves. So within this price action profile here, I'm teaching you how to get in here. And I'm teaching you also how to get out at 40 ticks. Okay. This is life changing right here. This is all you need to change your life. Okay. This is just extra. This is your blessing right there. So there's different ways that you can engage with price. Some people don't like the order block. Some people like the breaker block and the unicorn setup in here. Okay. Some people like the fair value gap. That's in the price run. And this one happens to be right here. And it was a deep retracement in there, but still there's your fair value gap. Personally, I like to get in and then I like to get the hell out before it even leaves the range. So by the time I'm out of my trade, retail's coming in off the buying pressure. So that right there is what you'll be hunting. Do you have any specific questions about any of it for me? Swing lows, premium discount. Do you have any questions at all?
For me
Uh,
myself, or
This one's for Sigurd.
gotcha, go ahead.
the breaker block.
The breaker block. Okay, it's
Yeah.
very simple. It's one of the hardest things to see at first, but once you finally get it, holy shit. The idea of a breaker block is you're pairing orders with both sides of the market, typically at both of their losses. So underneath these equal lows here and these relative equal lows here, there's sell stops out all throughout here. Okay, so it comes and grabs these stop losses. So these traders who went long, they're lost. They lost. They played a bull flag and now they're stopped out, right? Okay, the Elliott waivers too. They played their stupid pattern and boom, they're stopped out here. Okay, now there's shorts that are being induced because this is a selling pressure wick. So traders will see that as selling pressure in a double top. Well, their stops are right here. Now they probably didn't get in there. They probably got in here. So right away they're underwater, right? So the market comes down and grabs these stops and then trades them for these stops at both traders' losses. And that's what we're doing. So it's very important that the low makes a lower low. Okay, so this is how it goes. You have your low, and then you have a high, and then you have a lower low, and then you make a higher high. Now, if you don't make a higher high, if you don't make a lower low here, it's not a breaker. Okay, so what makes it a breaker? In a price liquidity run, you will see this phenomenon. You will see up close candles resisting up close candles. Up close candles here, resisting up close candles. Now price is dug into the stop losses. Now you and I are looking for the reversal. We're not looking at this as selling pressure. We're looking at this as a liquidity grab to come and pair orders with these losers up here. So the point is these bearish order blocks do what? They resist price. Okay. Then all of a sudden it doesn't. It doesn't resist price anymore. Remember, the order block is the change in the state of algorithmic delivery. The algorithm offers buy side and sell side to people in the market. It doesn't matter how many people are coming in and buying or selling. That's not what moves price. There is no amount of people that can come into the market and move price. That's a myth. It's made up. It does not exist at all. So the algorithm offers price to the participants in the market. It will go from buy side delivery to sell side delivery. This one here, buy side, sell side, buy side, sell side, buy side, sell side, buy side. Then it starts running for liquidity. How do you know it's running? Well, we've got up close candles resisting up close candles, and it ran to half of a fair value gap perfectly. So what does that tell you? Well, sell side was just grabbed. Now, I want you to notice what happens right here. This candle snaps to and through the order block. Now I'm going to pull from the bodies here, okay? Look at this candle, how it cleans that order block in one single clean pass through. Once it does that, you know that price is probably going to want to continue up. So you can be a buyer at the midway point of that bearish order block that was broken, becomes a bullish breaker. Once you pass above a bearish order block, okay, and this is how it is. You got your high, lower low, higher high. So this one actually goes like this. Where's that? Right there. Okay, you've got your low, high, lower low. Now this, look at how that bearish order block here resisted this candle here. But then look at, you couldn't get the close above the order block. So you're still bearish. That's how you measure order flow. The wicks are doing the damage to accounts. What was up here? What was up at these equal highs after this run down? Stops from people shorting. Boop. But did that candle close above the green box? No. So it's not a bullish breaker. That's continuation, and continued it did. Now that it's grabbed the stop losses from tricking traders into going long here, induced buyers one more time to come and take them out. Wham. Now look at the last up close candles here before this dump were broken in one single clean pass through and closed above. Now you have bullish order flow. You had it down here because that's the order block right there. That changed the state in price delivery here at this high right there. Boom. Trades up, breaker. Trades up, comes down one more time for the breaker, hits it perfectly, and runs up for the third purple line there perfectly. I can't make these purple lines, and you're going to get a little sneak peek into what your second session looks like here right away. So this is your bullish breaker block. High, lower low, very important. Higher high, boom, bullish breaker. Okay, and obviously it's the opposite for a bearish breaker. Okay, you've got your low here, higher high. Look at how this candle sweeps all this liquidity. Now you've got a lower low here. Low, higher high, very important, then lower low. You draw out these last down close candles before the pump. And what is that? That's your bearish breaker block. So price comes up, digs into it just ever so gently, and then snaps down. Comes back up one more time for the liquidity pool right above here. Bam, snaps back down, trades up, hits the bearish breaker one more time, never closing above the order block here, where the algorithm changed here. So when the price gets into here, what do you think is going to happen? It's going to change here. Whether or not it continues on down or snaps back above and flips into support, it's going to change its state and delivery here. So once you have this here and this there, what do you think is going to happen? Well, then you align your breaker with this. Well, how do you know? Just to enter here, just enter short, stop loss above the high, sure, yeah. Or you can wait for the close below the up close candle here with your mitigation block here, and then it breaks down and runs for sell side. So that's your bearish breaker. Now, Mr. Green, this one's for you, bud. Have you been using standard deviations lately?
No, I've been using the fibs. Is it the same thing or different?
A little bit different. So we use specific time zones to gather what may or may not unfold for the following day. Now grab a pen and a paper and let me know when you're ready. Or maybe you'll just watch this again and you'll just write it down then.
Oh, that paper and pen. Go ahead.
Nice. Okay. So your central bank dealers range, CBDR, must be more than 20, but less than 40 handles. Your Asia range must be more than 15, but less than 30. Okay, if your central bank dealers range and your Asian range are within those parameters, those are the deviations you use. If they are not met as a requirement, use the flout. Okay, so you use either the central bank dealers range if it's in favor, the Asian range if it's in favor, and then the flout if neither of those are in agreement. So let me go to a day where we had a favorable range here for the Asia and the flout. It's been a while, not gonna lie, because I've been waiting for certain price action profiles unfold with the Asian range being favorable. So this typical type 2 price action profile, this is literally the fucking holy grail to price action profiles right here. This is going to make you guys ridiculously wealthy beyond your wildest dreams. I want you to think about this for a second. From our order block right to the bottom, what did it offer? 1,500 ticks. This is one trading cycle day, one day. 1 24-hour period, midnight to midnight, and that thing hit 1,500 ticks. Now, how could you expect such a savage range? Well, when your central bank dealers range, or sorry, your Asian range, which is this purple box, and this is for your notes, 8 p.m. New York time to midnight, you're going to see a price action profile unfold that we call a protraction profile. So within this kill zone right here, between 2 a.m. and 5 a.m., you're going to want to see a setup take place. Now, this is just the same thing as our New York AM session, only instead of 7 a.m., we're using 1 a.m. as our go time. Okay, and then we're closing that go time at 5 a.m. for the setup to be found. Okay, I want you to notice what happens between this specific area of time when our Asian range is 25 handles. Okay, so more than 15 and less than 30. So our Asian range is favorable. Is the central bank dealers range favorable? No. And the central bank dealers range is from 2 p.m. to 8 p.m. New York time. 81 handles. So we're not going to use the central bank dealers range for this profile. Now, I want you to notice what happens here. A nice tight Asia range means that you are going to most likely, typically, flail out, and it's going to be really nice and smooth. When you get used to this, when you watch it play out in real time, you will begin to develop a trust for this. But you're never going to see this play out if I hadn't brought your attention to it. So we're looking at the midway point between the high of Asia's range and the first deviation of that range. So that's what this purple line delineates here. Once midnight hits, I cannot move. I can't move these lines anyway. Okay. I'm not going to move them. So when you see these hitting perfectly, you know I haven't moved them. I'm not cheating. It's the computer. It's the indicator that does it. Now you can take your fibs and go to the lowest low and the highest high and project some fibs on there. And you can see how we just failed to reach that midway point there. Typically, you're going to hit that or the first deviation of Asia's range. This is where your bias is going to come in. Okay. If you
From Christina, come here.
busy, if you are bearish on the day, okay, and you got less than 30 handles in Asia's range, let's say you're bearish, just because we have the benefit of hindsight here, you can sell short. It's 30 pips in the Forex market. So I think it's about 30 pips is 45, or maybe it's no, 45 ticks about there. So if you were to take a short based on this price action profile unfolding because Asia told you that this was going to happen. Okay, measure your deviation. How many ticks is that? That's 100. That's only a $500 loss just with one contract. Okay, so if you were, say, bearish on the day, you were in a premium, you thought, okay, we've got this news impact driver, we just ripped up on Thursday, we just took liquidity, we're in a premium, we have a bull flag, tight range, you're like, oh my goodness, this is going to rock everyone. So it's going to break out of the bull flag, trick everyone into going short. This is what you're anticipating when this is going on. Remember, we're trading into retail stuff. We're not looking at bull flags as an entry technique. This is, we're looking to capitalize off people's pain here because that's the markets. So this guy here, you can either limit orders throughout here in the first deviation of Asia's range. You can do this between the first two if your risk allows for this. Okay, but typically, man, we're not coming up here. Okay, usually it's the halfway point if it's really, really, really heavy or strong, whatever direction. But the first one is, you know, safe, right? Even a little bit above would be great. So the reason why I'm telling you this is because you can capitalize on one of these classic profiles, price action profiles, where London makes the high of the day and then New York close here, or sorry, London close into New York close makes the low of the day. Imagine catching a 1500 tick run. Like this is your mega trade right here. Okay. So like this guy here. Okay, see how it's 54 handles? Okay, so I wouldn't be using the Asian range for this. Okay, and look at how it doesn't quite hit my deviations up here now. It's kind of getting kind of messy here, but it doesn't quite hit my deviations up here perfectly. There's that one there, and then that's another one here. Right, it's just not accurate. Now, this just coincidentally had to be happened to be pretty sweet, but typically we want to use the flout for this. So I thought I had the history turned on here. So the flout's the blue one. Now this one didn't come down. It's not always going to be super perfect, but I want you to notice this right here. This, when you, if you don't have a favorable central bank dealers range, the green box or the purple box, the Asian range, you want to use the flout for some kind of an entry technique. Now, if you were looking at this to get hit and it didn't get hit, that's fine. That's fine. Let it go. When you split the flout's price range in half, this becomes like a military grade support or resistance area, as you can clearly see there. It's algorithmic. Okay, you will get used to this. And then obviously the flout, and I'll extend that to there. Is that it? Yeah. And this one again, just a Frickenstein, but didn't quite hit it hit the midway point. So is that I got a lot going on here, sorry. Yeah, so it hit the midway point between the 2 and the 2.5 price swing there. And it's not exactly perfect, but there it is. And does that hit the next day? No. Lots of the times you'll make an accumulation range here and then dab in. Yeah, exactly. Just like that. But actually dab in and complete the job on that price swing there. Kind of a horrid example there, but again, it's not always perfect. But a nice favorable Asian range there. So we wouldn't be using the flout. Now this one cleared all 4 standard deviations of Asia's range. So you can go to your indicator and you can turn on 10 of them. So does that hit? Oh my goodness. What did I just do? I'm not sure what I just did, but 94. Come on here. We'll just use the fibs here. So 8, and then we'll just attach another fib to this one here. No, this one. We even need one more. So you can gain a lot of precision using the ranges of Asia. And this one hit the 5th deviation up here. Boop. Damn near. I'm pretty dang sure that's perfect. I remember going over this already with some students before. But yeah, there it is. The 5th deviation hit perfect. Favorable Asian range. Snaps up. Boom. Now, how do you use this information? Well, typically you're looking for an AMD price action profile in the day. You want to see price accumulate and then manipulate. So the first original move out of the range is your Judas swing. So what are you looking for when it hits those levels? You're looking for sensitivity. That's it. You're just looking for it to move. You're looking for it to make your order block. It's either going to make an order block with a fair value gap in it for you, or it's not. And it's going to go up another deviation. Okay. All these sensitive price levels are what you're focused on. Or it's the model you need to be focused on when price action comes into your sensitive levels. And I've been going at this at exhaustion for the last little while. But this is such a prime example, and this was done live. I took this trade. This isn't some kind of hindsight crap. So that daily order block I just marked out, okay? These sensitive levels, what are you looking for? Well, look at how it comes for the deviation of Asia's range right here. Okay, the second one. Okay, why didn't it do the thing when it hit the first one? It wasn't deep into liquidity enough. You still had that halfway point of that fair value gap. Look at where the flout is. It's right there. Look at where it touches. Yes, it turtle soups in there a little bit. That's fine. We allow wickage. It's destroying people. So we've got to permit price to come down into here. Okay, if you go into your 15-minute, this is half of this fair value gap right here. Perfectly. Okay, even in the 10-minute, it's perfect. So you're waiting for price to come here. Okay, your daily order block, everything. Now, the reason why the daily time frames are so good is because look at price is fractal. The stuff that's happening in the bigger time frames is happening in the little time frames. So when price in the higher time frames gets to a sensitive level, you're dropping into your lower time frames to look for your order block. So what is an order block? Well, it changes the state of delivery. So once you snap to your little salad down here, you've got the flout, you've got the Asian range, you've got half that fair value gap, and your daily order block. Look at the sensitivity. It snaps up, closes above, consecutive down close candles. This candle here, open, runs all the way down, giving you an entry. You should know by now to front run your order block by a few ticks. Okay, it's not a big, you're not gonna die if you are not being impulsive, but front run your order block by a few ticks, and you know that. And if you didn't see here, you do now. We want to make dang sure you get a fill, and that's why, because it'll take off and you might not be skilled enough to get it in again. But once the candle closes above down close candles with that energetic snap up that takes a swing high, that's a market structure shift. That's it. You must take liquidity. You want to see your sensitive level hit, and this is the same thing for any sensitive level. What do you want to see unfold? You want to see price snap. It's not going to make this pattern unless it's going to move. It's an algorithm. So when you see this beautiful little sexy signature right here that repeats every freaking day, and it's in every top and every bottom. Okay, some of them are little subtle differences. There's a mitigation block in that one. Some of them it's the second candle, but there you go. There's your boom, right? Once you see that, now you've got an engagement. Okay, now you've got a nice setup, and it's at any sensitive level, whether it be a 786 retracement after a market structure shift, it does not matter. You're looking for a change in the state of delivery. The candles are coded by people, and a computer operates them. So if that's true, you're going to see thumbprints and things repeat, just like looking at ones and zeros in a computer coding, braille, or whatever the hell that is, binary. It's just like turning on your phone screen. It's programmed to turn on. It does something that repeats, that you recognize, that you can count on. That's this right here. Now, sometimes your battery is going to be dead. That's a lost trade. Sometimes you didn't pay your bill and your phone didn't work. That's a lost trade. Whatever analogy it is for you, you're not going to throw your phone away. You're not going to throw your model away. You're just going to charge your phone, or you're going to wait for your next setup. So the central bank dealers range, the flout. So the central bank dealers range, it's very rare that we do get a nice favorable central bank dealers range, but when we do, boy, the green lines line up good, and it's been a freaking while here since we've had an actual nice one. It's been like 122 freaking ticks, just 142 ticks, 80, almost 92, 45, almost. But let's hear. It's kind of a mess here, but yeah, just a little bit too much. So it's the green lines here. So it came for the blue line here. So that's a deviation of a flout, and then slaps down. Oh, you know what? Should be in the 5 minute, but that should be good. Yeah, they were captured there. Yeah, you just use your deviations for confluence. And again, the sensitive levels, all you want to see. So the fifth deviation was right here of this Asian range, which definitely looks favorable. Comes up, hits the fifth deviation there, and look at what we caught this short, actually. Not the whole thing, but we took this from the top rope. When it hits that, look at what happens, right? You start breaking down. There's your mitigation block right there. Drag that wick or that tail up. Okay, close down. Oh, you didn't get back up for a retest. Oh, it was the rejection block inside there. And that happens to you guys. This is why I'm telling you to front run your, and you heard it from the horse's mouth today. We treat wicks and tails like fair value gaps. Well, look at what would happen if your eyes were on the tail of that mitigation block right here. Closes below half, retests it, sells off with a vacuum block right there. So any sensitive level you get into, that's what you're looking for. You're changing the state of delivery. And then you've got yourself a wild, wild setup. And there's the flout right there, meeting awesome targets. These days, how are you in chop days? How have you been doing with losses, Mr. Green?
So I keep the losses short. I use the 46 to get out if I am in there, but I could probably take one too many trades as far as when I'm in chop. When I don't realize that I am in chop, I'm like, oh, I'm probably about to get a move, but it's going sideways. So I take small losses if I do get into chop.
Nice. So you're like far from blowing out accounts and you're done doing evals and you're close to being funded, right?
I haven't gotten to that level yet. I've just been doing demos the whole time.
Oh
So
man, good
yeah, I
for
want to
you.
go. Yeah, so I want to go to that next level, but I'm very cautious and doing things like do things very small. So I need a little push to be a little bit more brave to branch out into, you know, if I blow an account, I blow an account and to say it's not the end of the world in that regard.
What's your risk reward been like?
So I've been trying to do 3 to 1.
All right, well let's start documenting your trades. So for the next 4 weeks, I want you taking maximum 3 trades in a day. I want you to decide how much money you're willing to lose per day. I want you to have a cap on what you're willing to cost on your, you know what I mean? I want you to have a
Yeah.
cap on what you're gonna spend in your business. So
Okay.
let's say you have $1,000 loss limit, personal loss limit. Okay, and you take a trade and you lose that $1,000, you're done. You don't have 2 more shots in your gun. You're done. You can split, you know, that into, let's say you do a $500 risk. Then you do, and then if you lose that one, now you do two $250 risks, right? Not only do you have a stop cap, I want you to have a profit target. What's your typical risk? 400?
Right now, it's I just do the. I don't even look at the number per se. I just look at the ticks. I just put 40% tick, 40 ticks. So
Oh, so
um,
what percentage?
I only put like 3 contracts on at a time, or for the NQ and for Bitcoin, I just use one contract. But
Okay, sweet.
I'm just using
Six
go.
hundred dollar risk with a 3-to-1 R, right? So you want to make $1,800. So what's it going to be? What's your ends met? What's your monthly ends met? Let's say 5,000 US dollar. Would that cover just your ends?
I say it's 6.
6 grand? Okay, that makes it easy. So you got $1,500 a week that you need to pull out of the market with a $600 risk, and that's your mental capital. So that means that you've got like one trade and a bit to it's just an example. If you're risking $1,000 per day and that was your maximum loss limit, that means you have, one shot at a $600 risk and then two at 200 to try and get at least 50% of your previous loss back. Or maybe you hit a banger. Maybe your second shot was the perfect entry and the first one just wasn't it. It happens a lot. Make sure you're only doing 3 trades though. When you see your model form, you've got 3 chances to grab that sucker, and that's it. I'm giving one more shot to. There's some of my students who are having a really tough time. They only get 2 shots. Okay, and I want you reporting these trades to me for the next 4 weeks. Okay, and by doing this and you being selective in your setups and journaling for the next 4 weeks, I'm going to show you how much freaking money you're going to be up in your demo. And you're going to not believe it. You're going to be just absolutely excited for, the real thing. Sounds like you already know what you're doing. As far as
Uh,
as far as a model goes, you're just having
okay,
trouble waiting.
yeah.
Am I
I'm gonna say I'm saying I'm not perfect yet. I'm still working at it, but yeah, I can see the model when I'm there and to try to get in. It's just sometimes I need to take one or two attempts to get into the trade because I get stopped out sometimes.
okay?
So
I'll do a
mhm.
60 tick stop and 180 tick take profit. Now, this is your personal trading plan. If you see me talking about anything else to anybody else, just ignore it. This one's just for you.
Say that one more time again.
60
Repeat.
tick stop
Okay,
loss and
okay,
180 tick take profit.
okay,
Okay,
got
that's
it.
just for you. So
Okay,
that's gonna be a little bit more risk. Okay, that's not gonna be a $600 stop loss anymore. Okay, it's gonna be a little bit more. So let me see here. So that's gonna be a $900 risk. Can you handle that?
yeah,
Okay, what's your account size that you've been trading with on your demo?
100.
100K?
Yeah,
That's a 1% risk. Okay. Okay, yeah, that's perfect. Okay, this is what I want you to do. Come in here, and when you go into your setup, I want you to just click one right there, risk, and you might have to change it from that to that, but one risk, 1%. Hey, this is what I want you to do for the next 4 weeks. Because you're still in demo and you're in no rush to eval, this is what I want you doing. Because you've done this, you are getting a prize. You are getting something that nobody else has gotten yet because you haven't rushed. And
okay,
this is beyond awesome. So 1% risk, and mine is 300K or whatever plus, but and then 100 and was it 60? No, 180, right? 120, yeah, exactly, 180. So you're going to be risking 1,000 to make 3,000. Okay, so if you make if let's say you've got a $6,000 quota, you go and risk 1% and you nail that trade. You just made 2 weeks of quota in one trade. I want you to stop there for the entire week. Do not continue. Once you've made your quota for the week, you stop. If you happen to double it, triple it, just stop for the week. You're already paid yourself for next week by doing this. So now you get to enjoy your freaking life, and which is exactly why we're here. The following week, let's say you waited for the perfect setup, everything was great, your trade went out in your favor, everything was perfect, you make another $3,000. You just traded twice in 3 weeks, and you've made your quota with the 3-to-1 risk reward. And that's just 1,000. That's just 1%, bro. Wait till you get a $300,000 account. As you can see, like a 3-to-1 R is quite nice. And that's one trade right there that takes care of my entire ends met right there. So very important that we hammer in the discipline. It's going to things are going to play tricks on your mind. You're going to make a lot of money, and you're going to lose sight of $6,000 because you're going to be laughing at it. You're going to be like, yeah, you're going to be like fit for biz. I just made 100 grand. I'm balling with no payout. Like, don't let it get the best of you, because he's lost sight of his low hanging fruit objective. He made $17,000 last week in live accounts. Well, not live, but express accounts. Now he's like, how do I do this all the time? Now he's got the fix. Now he needs another fix. And his low-hanging fruit objective, I'm like, bro, how much money have you been living off of for the last 6 months? He's like, nothing. I'm like, then what do you mean you need more than $17,000 a week? Like, what happened to your low-hanging fruit? Where did you go? Like, you literally just blasted off into outer space. You're not even in reality anymore. And the reason why I'm really talking about this is because it's important. You're going to go through this, both of you. You're going to make stupid amounts of money, and you're going to lose sight of, what you wanted, what you were, yeah, you're going to lose sight of what you wanted just to get out of whatever you're going through, whether it be debt or a dumb job or whatever it is for you. Everybody's got something. We're all here for a reason. So this is it right here. You have a price action model. You have algorithmic price. I can't grind this into y'all's head enough. You guys have it made. You have an algorithmic timed price action model with absolutely zero indicators where you can just set your watch, come into the charts, and you can take out thousands and thousands and thousands of dollars at your freaking whim. But that ain't going to happen if you're chasing price action and just impulsively clicking because candles are moving and you have to get it right now. I know you're not there, Mr. Green. And so you're just joined, but it's very important that, just in case these things come up, I have to mention them. So for the next 4 weeks, you're doing a 1% risk, 3-to-1 risk reward. Do not take partials. Don't move your stop. Trade every single day. I know that sounds totally horrible compared to what I've been saying to you guys, but I want you to trade every single day. And the reason for this is by showing you through the fruits of your own experience and losing trades and being okay with it, because it sounds like this is part of the issue, you will condition yourself to being okay with losing trades by still being up a retarded amount of money for the end of the month. That I can tell you. Okay, you walk away from your losses like with a badge of honor. And it's so psychologically damaging to call them losses. Okay, don't look at it as winning or losing. That is the wrong way to look at the markets. We're not retail. We're not playing stupid flags and crab bat patterns. We're literally playing. I can't. It sounds like I'm talking out my ass here, but I'm not. We are literally trading like smart money. Institutional bankers. We are buying discounts and selling premiums. That's what they do. That's what we're doing. So when you take a hit, you're not wrong. Maybe you were, but typically you were just simply offside. Don't look at it as right or wrong. It's not a defeat. You could end up making 100 grand and then losing a lot of it because immediately, and this is instinctual, just as men, you will look at it as an absolute defeat, like the world is ending because you were just on this win streak and now you're knocked off your high horse. It's devastating. Don't let it be. It's not. You're still going to be up. It's all babe. Yeah, I'm almost done here. Huh? I'm, I'm mentoring. I'm studenting, huh? Naz? Yeah, it's a private session. Yeah. Word. My wife loves joining my sessions now. She didn't pay attention to what I was doing. And then all of a sudden she started joining my sessions and now she's like totally starry-eyed. It's amazing.
That's awesome.
Yeah.
Hello for me.
So yeah, it's the mental stuff is what, so if you spend another 6 months with me, Mr. Green, we will really, and especially after this 4 weeks, and you have to do this work. I cannot do this for you. The next 4 weeks, we're going to go over all your trades. We're going to add them all up, subtract all the losses. You're going to see how much you were up. And then within your journal, you're going to tell me, okay, where were your weaknesses? When you were losing, when you lost that trade, how did it make you feel? What did you do to curb your instincts in going back in and trying to get that loss back right away? This is the hard work that you have to do. Okay. This is what's going to make you an absolute freaking monster trader. Okay. And I promise you, if you do this, you will see growth and it will be like, it will be noticeable. You will be like, whoa, this is crazy awesome. I promise you, man. I was the same way, man. I told my mentor, ICT, I told him straight up, I'm not journaling. Like, that's stupid. And when I started doing it, I was like, oh my goodness. I'd start journaling my day, and then all of a sudden I'd have these epiphanies. And I'm speaking from absolute experience. Don't miss the boat on this one. Then when you're ready, and if you would decide you want to chill out, all those things that you were feeling and doing wrong, because you're going to do things wrong still, and that's fine. You are permitted. You're not trying to be perfect. We're trying to figure out the stuff where that's what we're trying to do, is figure out the stuff you're doing wrong. So do not be shameful in it. You're going to have to make notes of these, because those are the things that we have to curb. It's just like trying to ride a bike with a flat tire. You're going to want to go and pump your tire up, right? You're not going to ignore it and make the ride harder for yourself. So,
So I did some journaling previously before, and I was more consistent in the beginning. And when I did, I read through them again and made some notes on a computer Word document or whatever, and I put them together. So I just probably have to review those guys as well too, and see what was consistent about those entries that or errors that I made, and what I learned